Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Cronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Hey, thank you, Jeremy. Thanks for our listeners jumping on another call. Just rally. We saw U.S. equities rally for the third consecutive week as we did see some Middle East tensions maybe ease a bit, putting some more optimism back in this market, that things will be hopefully resolved in a timely fashion. So if we look at the equity performance, we look at the S&P 500, that was up about 4.5%, with the Nasdaq 100 up about 6% for the week. Now, if we look at since March 31st lows, we saw the S&P 500 up 13%, where that Nasdaq 100 was up 17%. If we look at a smaller group called small caps, the Russell 2000, that was up about 6%, with the overall Russell Composite up about 7%. We saw growth in travel really leading the gains, with rate-sensitive sectors kind of lagging a bit, particularly housing. If we look at the housing and small business numbers that came out, we saw existing home sales fall to about 3.98 million. The NAHB index, that was at 34. That was a weak builder sentiment number that did come out, though. We saw small business sentiment, that slipped to about 95.8. If we look at inflation, and let's look at the kind of some of the growth data that came out. If we look at the PPI, that rose at about 0.5% month over month. That was about 4% year over year. That was really heavily influenced by energy. If we look at manufacturing data, that was pretty mixed with some weak Empire Index numbers, a strong Philly Fed number. We look at industrial production, that dipped a bit with the labor market staying pretty firm with some jobless claims, about 207,000. If we look at the U.S. Outlook on the economy, it was pretty boosted on Friday by a pretty good rally. Some volatility likely persist, given some of that unresolved risk, if we might, with the geopolitical events that are happening overseas. If we look at global growth, we saw some lower energy prices influencing the odds that global growth will reach the IMF's number of about 3%. If we go overseas, we saw Europe's industrial production. That was positive, with ECB flagging some downside growth, some upside inflation risk. We saw the UK's GDP come out up about 0.5%. Australia's unemployment, that stayed pretty steady at about 4.3. In China's GDP, that was about 5%, with industrial production of about 5.7%. We saw some weak exports, positive 2.5%. Overall, the bottom line, we saw some falling energy prices, some easing tension with the geopolitical events. We saw some constructive near-term outlook, boosting the market, boosting the sentiment in the markets last week. Now, the week ahead, long story short, it's going to be driven on headline from the Middle East tensions, what role that could play with inflation, how that's going to affect the consumer. And really, we're in the middle of earnings. And that's going to be really what drives this market. Geopolitical events, headline, events come and go, but it's going to be really driven off earnings. Like I mentioned last week, we're expecting a pretty good, solid earnings season that should continue to drive stock prices, even though you got to expect some volatility, even though we're hitting some new highs here on the indices. So some notable reports that are coming out might be like Northrop Grumman, Lockheed Martin, AT&T, Tesla, and then we got some airlines. Jeremy?
Well, Graham, we always appreciate the information and expertise. And thank you to our listeners that check in with us every single week. And we look forward to seeing you next time. Have a great week.
Take care.